Hello everyone. Today I'm going to present on the topic stock market analysis with example. In this presentation, I will explain what stock market analysis means, the different methods used, and finally, I will take a real life example of Infosys Limited to demonstrate how analysis is done in practice. Shall we begin? What is stock market analysis? The stock market is where investors buy and sell ownership in public companies in the form of shares. Stock market analysis means studying this market carefully to understand how and why stock prices move. It helps investors decide which stocks to buy or sell, when to enter or exit, and how to reduce risk. In short, it is a systematic approach to making smarter investment decisions. Objectives of stock market analysis: to predict future price movements of stocks, to evaluate the financial health of companies, to identify undervalued or overvalued shares, to understand investor behavior and market trends, and ultimately to provide maximum profit while minimizing risk. Without proper analysis, investing becomes guesswork, which can be risky. Types of stock market analysis. There are three major types of stock market analysis. Fundamental analysis, which looks at the company's actual business and financial performance. Technical analysis, which focuses on stock price movements and trading patterns. Quantitative analysis, which uses mathematical and statistical models to find patterns or predictions. Let's understand each of these one by one. Fundamental analysis. Fundamental analysis tells us the true or intrinsic value of a company. It involves studying financial statements like the balance sheet, income statement, and cash flow. We look at key factors such as revenue growth, profit margins, debt, and return on equity. It also includes broader economic factors like GDP growth, inflation, and interest rates. For example, if a company has consistent earnings growth and low debt, its stock might be undervalued, meaning it's a good buy for the long term. Technical analysis. On the other hand, technical analysis doesn't focus on company performance. Instead, it studies historical price charts and market trends. It assumes that history repeats itself, meaning past price patterns can predict future movements. Some common tools used in technical analysis are moving averages, relative strength index, and MACD. For instance, when the 50-day moving average crosses above the 200 moving average, it's called golden cross, which signals a possible price increase. The third type is quantitative analysis. This type, which uses mathematical and statistical models. Analysts apply formulas, regression analysis, and even machine learning to predict prices or find trading opportunities. This approach is often used in algorithmic trading and high frequency trading, where computers make decisions in milliseconds. It's data driven and objective, reducing human bias. Now, to understand how analysis works, let's take a deep real life example of Infosys Limited, one of India's leading IT companies listed on the NSE. Infosys have been known for consistent performance and global reach, making it a good candidate for analysis. We will study Infosys using both fundamental and technical methods, analysis methods. Fundamental analysis of Infosys. Starting with fundamental analysis, earning per share EPS is about rupees 62.5, showing strong profitability. P by E ratio is around 25, which is reasonable compared to other IT companies. Dividend yield is 2.5%, showing that it provides regular returns to shareholders. Debt to equity ratio is 0.08, meaning Infosys have a very little debt, a positive sign. Return on equity is 30%, which shows efficient management. All these indicators suggest Infosys is financially healthy and has a strong fundamentals and a good term bond. In conclusion, solid fundamentals, good long-term investments. Technical analysis of Infosys. Next, let's look at the technical analysis of Infosys. The stock has been in an uptrend for the past 3 months. Its 50-day moving average has crossed above the 200 moving average, indicating a bullish momentum, or in a simple words, is likely to grow up. The RSI, or Relative Strength Index, is around 58, which means the stock is neither overbought or oversold, is stable. And finally, the MACD shows a positive crossover, another sign of potential upward movement. So, from a technical point of view, Infosys also gives a buy signal. Final decisions. When both fundamentals and technical analysis show positive results, investors can be more confident. Based on our findings, Infosys is financially sound, shows technical strength, and offers steady returns. Therefore, the final recommendation would be to buy Infosys for the medium to long term, expecting a 10 to 15% return in the coming months or in next quarter. Tools used in analysis. Stock market analysis requires good tools and data sources. Some commonly used ones include Yahoo Finance, Money Control, which you have heard about before, and TradingView for stock data and charts. Analytical tools include Excel and Python for analysis and visualization of the big data. Bloomberg Terminal, which is a technical professional platform for professional grade financial insight. These tools help investors visualize trends, calculate ratios, and make data driven decisions. However, stock market analysis is not always easy. There are some major challenges such as high market volatility, prices can change suddenly, over reliance on historical data, which may not always predict the future, emotional decisions by investors driven by fear or greed, global events like wars or policy changes that can disrupt markets, and finally, too much data, which makes it hard to identify what truly matters to the data. Looking forward, the future of stock market analysis lies in technology. Artificial and machine learning are being used to predict trends more accurately. Sentiment analysis from social medias like platforms like Twitter help understand public opinion. Robo advisors are becoming popular for automatic investment management, and there is a rising focus on sustainable investing, considering environmental and social impacts, also known as ESG investing. To conclude, stock market analysis is a powerful tool that blends finance, data, and psychology. It helps investors make informed and confident decisions. Combining fundamental, technical, and quantitative methods give a balanced, accurate view. As Benjamin Franklin once said, an investment in knowledge pays the best interest.